Hey guys, welcome back to a brand new video on the Brazil FX trading. So as I'm on this plane, I'm going to show you one of the easiest way you can trade in the forex market, guys. As concerned now with the business class of Ugandan Airlines, as you can see. So if you're new around here, make sure to subscribe and let's jump into the video. I'm going to show you one of the easiest ways you can trade in the forex market and be able to make money from anywhere, guys. As you can see.
So traders, first things first, the broker that I'm using is Fxview, and Fxview is registered in 4 countries to make sure that your money is safe. Fxview offers the lowest spreads and commission in the forex market, guys, on pairs like gold. Most of you guys know me, I love to trade gold, and you can even see here I'm going to be explaining to you my simple forex strategy on gold right here. So, and also Fxview offers the best deposit and withdrawal methods for you to get in your money and get it out, you know, methods like crypto and mobile money for those people that are in Africa, and also mobile money is coming for you guys that are in Uganda. So make sure to get your Fxview accounts. I'm going to be leaving the link below, guys. Make sure to trade with the broker that is registered and an awarding winning broker, guys. So now traders, when we come to our chart, this is our gold chart, and I'm going to be looking at my 1 hour candle, and we shall be looking for the confirmations in our 15 minutes time frame and also the 5 minutes. So this is my chart right here, traders. Now most of you guys know me, when I'm trading in the forex market, I like to keep my things as simple as possible. And one of the ways I like to keep them simple is trading demand and supply. The demand and supply is one of the easiest ways you can trade in the forex market, you know. So I'll first give you a little bit of what demand and supply is. So anytime when you come to your forex market and then you see a zone in the market like this that goes up like this, so probably the price has been consolidating for quite a period of time, and then all of a sudden it breaks out with probably, let's say, 3 big candles. Let's say these are 3 big candles. That is 1, then this is 3, this is 2, and then 3. So let's say this is this aggressive buying to the upper side. So whenever price does this, this is aggressive buying, and this zone that caused this is called a demand zone. So probably price will come back here, you know, bounce back in here and then go back to the upper side. That is what demand means. You can see. So always we just want to mark out this zone in the market before price comes back. So when price comes back, we know it's just going to bounce in here. Because remember, traders, anytime when you have demand and supply in our market, you know that is smart money in place. Smart money, I'm talking about the banks. These are zones that are used by the banks. These are known to all traders, guys. That's why anytime when you see price come back to this zone, it's going to leave a V-shaped structure. A V-shaped structure, that is the only banks that can cause these movements in the market. Retail traders can never move the markets like the banks do, guys. So this is what I'm going to be teaching you today. But I'm going to be teaching you something that is even more advanced, not just something basic. This is something that anyone can understand. But I'm going to teach you something that is more advanced so that you can be able to apply it to your trading system and, you know, make some money from the forex market, guys. So what I'm going to teach you today is, again, it's simple, demand and supply, but quite advanced. Now, what I'm teaching you guys, we always want to see momentum build up, probably to the downside or to the upper side. Now, this is the momentum that I'm talking about. You can see we're clearly in a downtrend market. As you can see, we're clearly in a downtrend market. But in this downtrend market, you can see, traders, we're always going to look out for a zone where price leaves a support zone like this. You see this support zone right here? So we always want to draw it out. And then you draw it out like this and then drag it to this side. You just make sure it's a horizontal line. So now when I draw this line like this, I'm trying to indicate that price came to this zone right here, bounced off. Then this is a support zone now, since price has failed to break this spot right here. So this is a support zone. Price pushes back to the upper side, and then after it comes back to the same line. Remember, in the forex market, we have support and resistance everywhere. Like price is always trying to break somewhere, or it's always finding support somewhere. So you can see traders here, price approaches our zone again. It breaks it, but I want you to notice that it breaks it with much momentum. Much momentum, I'm talking about 1, 2, 3, 4, 5, 6 candles. Like these are 3 candles, as you can see, guys. So meaning price has broken this part right here with much momentum. But remember, we said demand is aggressive buying and supply is aggressive selling. So what do we see here? We see aggressive selling. So meaning the zone in the market that caused this is this zone right here, and we are going to be using this as our supply zone. So we mark it out. You know, we always want to mark it out. just like these traders. You see, we mark out the whole zone. We don't just mark out one candle. Some people, when they're actually marking out their demand and supply zones, they tend to like just draw like one candle like this and then drag this to the future like this. But for me, I always like to draw out the zone, because we are talking about a zone in the market that has caused. So the zone is not just that one candle, but it's all those corners right there. So we just mark it out like that. You see, traders, now we have a beautiful zone like that. You can see, guys. Now here we just wait for until when price is going to come back up here, and then take out tap into our zone right here. As I mentioned, we're always going to see banks come back and tap in and then go back to the downside. That's why you see this V-shaped. But one of the things that would help you tell you, okay, price is going to reverse, we have a falling wedge right here, and a falling wedge is just a reversal pattern to the upper side. You can see, so we had a falling wedge indicating that price is going to reverse back, you know. So for you, if you're there and you're probably wondering, okay, when will price start coming back so that I can sell off when price taps into my zone, you know. So for me, I would be taking two types of trades here. I would be taking this first trade right here, which is my buy trade. You know, anytime when you have a falling wedge, you always want to see price break out of the falling wedge and then, you know, reverse and go back to the upper side, as you can see. So you can see we had this right here. You put your stop loss just like that, you see, guys. And what makes this even more profitable is that when price breaks out of this falling wedge, it's going to attack this zone right here with really much momentum. So when price, probably, let's say if you didn't take this trade and you're waiting for price to come into your zone and you take your trade, obviously, you can see, guys, price tapped into our zone right there, giving us an M pattern. So when I zoom in just like this is an M pattern. You see? An M pattern. You see this right here? So whenever we have an M pattern, price has to give us, we have to have a neckline. So the neckline, we can also draw it out just like this. This would be our neckline, you can see, guys. So meaning price is going to break the neckline, retest it just like the way you see right there. You see? And then also price was giving us tweezer tops. These are tweezer tops, and tweezer tops are also reversal candles to the downside. You can see tweezer tops right there. Even when you zoom into your small time frames, you're going to see literally the same thing, guys. Like price was telling us it's reversing, you can see. Now in our smaller time frames, you can see we had price give us another double top right here. This is a double top right here again. So the first one was this double top. Again, your price gives us another M. Another M, you see, telling us that price is definitely going down. So me, I would be taking my trade on my 1 hour candle just like here. I always take my demand and supply trades on 1 hour candles. But I zoom into the smaller time frame to confirm, you know. So I would be taking my trade just like this, guys. This is one of the easiest ways I'm going to be trading in 2024, guys. This is the only, if I don't see this in the Forex market, I'm not going to be trading. You see, traders, I always like to put my stop loss just above here and then put my take profit. Sometimes I measure out the previous impulsive moves as my take profit. So I would measure the distance between here to here. You see, you can even literally see price give us almost the same thing to the downside before starting to consolidate again, you can see, guys. So price gives us this big push to the downside. As I mentioned, whenever price comes back to the demand or supply, it's just going to give us a V-shaped structure. You can see this is a V-shaped structure. You see price just comes down, you know. So demand and supply, this is one of the easiest ways. Or your take profit will be hit, you see. Even though you don't measure out this target right here, you can just literally zoom out like this and then see at the far end here and see which one is the recent zone, which is the recent zone. You can see our recent zone right here is this one right here, where we even have a weak rejection. As I mentioned, weak rejections, these ones this week can also act as demand and supply zones, these ones right here. But for me, in this case, I would just use it as a recent zone, as you can see, guys. A nice push. Now, when I zoom out just like this, you can see, guys, currently here price was in an uptrend, as you can see. Then after, when it reached up here, it consolidated. Oh, it was ranging, you see. Now here price was reversing. Now you can literally see that we are even trading according to the trend of the market. We are selling. You see, traders, you always want to trade according to the trend of the market. So this is example number 1. Let me show you the last example. Example number 2 is right here. Now here we see price is currently trying to reverse, you know, to go back to the upper side. Now what do we have? As I mentioned, we always want to see momentum build up to the upper side, and we want to see a zone in the market that has been probably turned into a resistance, which is this one right here. You can see, guys. Now we always want to mark out this zone right here. We want to use our trend line. We have to mark it out just like this and pull this to this side. Now whenever we have this is called a break of structure, guys. A break of structure. We always consider demand and supply zones if we see that this break of structure. This is why I told you guys this is more of an advanced demand and supply. So again, as I mentioned, our confluences, we want to see break of structure just like this, and then we want to see price push up to the upper side, break this structure right here. Or the break of structure was caused by a really high volatile push to the upper side. Now you can see this is the push to the upper side. Now, as I mentioned, what is demand? Is an aggressive buying. Or it's the zone in the market that has caused an upside move. So this is the upside move. You can see we have 1, 2, 3 big candles. You see traders, even if we even have fair value gap, you can see we have imbalances right here. So meaning that yes, price has to come back down and fill up that fair value gap. Remember, I told you in one of my previous videos, anytime when you see a fair value gap is also liquidity, and price has to come and take out that liquidity and then reverse and go back to the upper side. Now, since you see this is an uptrend, we are going to be looking for buys. So now, which is the zone that caused the upside move? This one right here. We have to mark it out with this box. This zone right here, and then just mark it out like that. You see traders, just like that. You can see. Now now our main thing now here is just wait for price to come back down here and take out to take out the liquidity, or to fill up the fair value gap, or even to come back to the demand zone. And then we want to see the V-shaped structure. We don't want to see price consolidate. You see, whenever you see demand or supply, you never want to see price come back to your zone and start consolidating from there. You just want to see price come and give you such a structure. You want to see price just come, tap in, go back to the upper side. That's the only thing we want to see. We don't want to see price starting to consolidate, playing around your zone. So this is what we always want to see. So as you can see, this is what we always want to see. We want to see the V-shaped structure. As you know, the V-shaped structure indicates that yes, smart money is in play. That's why I always love to take out such moves. That smart money is going to come and take out this liquidity and then after drag the markets wherever they want. You can see, guys. So as I mentioned, we have fair value gap. You can see all the fair value gap was filled up, and then price tapped into our zone right here. So here I take your trade with a lot of confidence, measuring out to the previous impulsive move as I will take profits. As you can see, so I'll take my trade. Obviously, I can take it exactly here, but I can even take it up here on this other candle after it closes. But for those that want confirmation, you can always zoom into the 15 minutes time frame. So what do we have on the 15 minutes time frame? You can definitely see, guys, we had one of my best confirmations. If price comes back into the zone, you want to see any candle let any candle close from outside, just like this right here. This candle right here, let it close from outside. Now, when you see this small candle, a small red candle and a big candle, a big green candle, this is called an engulfing. This is called a bullish engulfing candle. So you see, we have a bullish engulfing candle pattern on our 15 minute time frame, indicating that price yes is going to go back to the upper side. You see, traders. But on our 1 hour candle, we see two candles that are giving us more of weak rejections. You can see this weak rejection and a V-shaped structure. So here you take your trade with confidence, just like this. As I mentioned, you measure out the previous move. You can measure out just this move right here, or you can put your target at the previous zone. So since also this trend line is liquidity, I can just put my target just somewhere like that, and then drag this to this, and then put my stop loss just there like that, guys. And now here price just floats and takes you to profits, because again it's smart money in play, just like that, guys, and you'll be in profits, guys. This is one of the easiest ways, very simple but advanced. It will let you make money from the forex market. Because with such a type of concept, it will let you know the days you need to be in the market and not to be in the market. This is one of the ways I'm just going to be trading in the forex market. Very easy and precise, guys. So if you've enjoyed this video, guys, make sure to subscribe, and remember the broker that I'm using is Fxview. Fxview is rated in 4 countries. Make sure that your money is very safe, guys. And guys, whoever signs up with the Fxview link that is below this video, DM me or add you to my VIP group for free, so that you can make money together, guys. So if you've enjoyed this video, make sure to subscribe, and I'll see you in my next.